Can you see my slides? Can you see my slides by any chance?
No, sir.
No, sir.
Okay, I can see it on my screen. How do I get it on your screen? Do. Still cannot load my slide. Maybe because I'm invited, is it? I cannot upload my slides. I'm going to share content. Browse my computer. Select my lecture notes. And it doesn't seem to open anywhere. Unless I email to one of you my slides and then you open it. Is it possible? I can see my slides. I assume you can't see it.
So what if
Hmm.
you just send the slides to us and then we try to open it from our side
Send.
to share screen from our side. Mana tahu can help.
This is what I've been trying to do. Share screen. Because when I share screen, more actions. What's the more action? Full screen. Because I don't have the icon that I have previously, you know, where I can download. This one doesn't allow me to download, you see. Share content. No, technology is terrible when it doesn't work. Yeah, share content, open my file, but it doesn't open on the screen here.
Maybe you can just send it to us or send it to me and then I'll open it from my side so that everyone can see it using my screen saja.
Me is who?
Me Nakila. Arah the group lah, so send saja.
You're siapa nih? Which one's who's talking to me?
Nakiba.
Which account to send from? I'll try and give you my slides. Research. Mana dia? Okay, just sent to you. I don't even have a chat icon here. I've emailed to you already.
So send arah Microsoft or email.
I sent from my private email. Ada?
Let me try to share it. Okay. Nampak tak?
Mana? Sudah? Yeah, okay.
Yeah.
So you have to change this. Can I change the slide?
I can change the slide.
Okay, you have to change for me.
Okay.
Okay. Now you see me live. Okay. Sorry about all this technology. Looks like we may have to do the same thing next week. I'm actually in Liverpool now. Just enjoyed watching the football last night. So, okay. Actually, this will not be a very long lecture, maybe 45 minutes. I got my timing wrong. I woke up at 4 o'clock in the morning. Sekarang rupanya it's 5 o'clock, 5:30 local time, not 4:30. Okay, next slide. So today's lecture, as I mentioned last week, is just going to cover two very quick topics: taxable and exempt benefits and property income. Okay, next page. So what are taxable benefits? When I was working in London, we used to have a lot of non-cash benefits given to us. For example, lunch vouchers. We used to get a free lunch at our KPMG office in London, and it's actually a 3-course meal. You have a starter, lunch, main course, and dessert. So that was considered as a non-cash benefit, and the monetary value put at that time was, I think, £1.85. Bear in mind that's 36 years ago, yeah? £1.35. So that was below the taxable threshold for benefit. So employees tax on their cash earnings, so your salaries and benefits. So I'll go through what some of the benefits are. And then employees are taxed on benefits under a certain benefit code, which is under the PAYE system or under the UK tax system. There's a code on the benefits that you can receive, and the code signifies what benefits you are entitled to. Yeah. So in general, the amount of benefit taxable is reduced by any amount paid by the employee to the employer by 6th of July following the end of the tax year. I think there's an example probably later on in the slide as to what is meant by the taxable benefit being reduced. And certainly many employees receive non-cash benefits as part of their remuneration package. And some of these benefits may be fully taxable and others may be wholly or partly exempted. Okay, next slide. So the next few slides will be examples of what are taxable benefits. And of course, when you look at it in the Brunei situation, if you have personal income tax, how do you assess the benefit that's given to you in terms of free medical, free education? Do you need to put a monetary value to the benefits that you receive? But in Brunei, assuming we had personal income tax, because the benefit is given to everyone, whether you're working in government or in the private sector, then that benefit will not be considered as a taxable benefit because it's benefit to everyone. But assuming that there's no free medical in Brunei and companies decided to provide certain medical benefits to employees, then whatever medical expenses that the company incur on your behalf, on the employee's behalf, will be considered as a benefit. So if the company pays $100 for your medical and you reimburse the company back, say $50, then your taxable benefit is the difference, which is $50, not $100, because you've also come out with an reimbursement to the company. But if you do not reimburse the company and the company pays $100 and you pay $0, then $100 is considered as your benefit. So in this case, vouchers. What are vouchers? These are taxable benefits where an employer provides an employee with vouchers or use of a credit card. Now, some companies, for example, like Brunei Shell in KB, any staff that travels or uses or incur expenses on behalf of the company, they are actually all given now credit cards. So when you travel overseas, an employee is given a credit card, a BSP credit card, and they would use that credit card to pay for the expenses. Because those are direct expenses for the fulfillment of work, it is not considered as a taxable benefit because it is a one-to-one cost increment. In the old days, what BSP used to do and what companies to do is, for example, they give you £1,000 to go to the UK. So £1,000 is your hotel allowance, and you only spend £500 because you decide to stay in a cheap hotel. You want to make money from the allowances, yeah. Then that difference between the £1,000 and the £500 that you incur is considered as a taxable benefit. Okay, so in the old days, a lot of people could do that. So if Brunei imposes a personal income tax system, then we need to look at all these benefits that has been given to employees. It is quite common actually for a company to give you a lump sum. Okay, here you're going to London, I'll give you £200 a day allowance. I think that's what I was given previously when I was asked to do a job for the government. And if you decide to stay in a cheap place, then you pocket the difference, yeah. But if you decide to spend all of it, then you have no taxable benefit because you've already utilized all the benefit that's given to you. So in this case, hence, if an employee receives cash vouchers, which are exchangeable for cash, when I used to work at do the audit of Diners Club, they were given free meals, free lunch. In fact, their lunch was far better than KPMG. I mean, Diners Club is one of the premier credit card companies. They were operating in Fandra. And in essence, it's a voucher. We give a voucher to Diners Club in exchange, not for cash, but for food, which has a monetary value. If that was more than the KPMG value, then that difference is a taxable benefit. And if an employee uses a credit token, such as a credit card, to obtain cash, goods, or services, or receives exchange vouchers, such as book tokens, also known as non-cash vouchers. Sometimes for long service, for companies like to give, people want you to read. I mean, the UK culture is to encourage people to read, to buy books. And as a benefit, sometimes they give you cash tokens or book tokens, to buy books, which are not cash in value, but when you redeem it for books, there is a monetary value. So that can be considered as a taxable benefit. So the employee is taxed on the cost to the employer of providing the benefit, less any amount that the employee pays the employer for providing the benefit. Okay, so as I mentioned, if the hotel costs £200 and you're being given £200 by the employer and you only spend 100, that difference is going to be your taxable benefit. So actually, when you do tax returns in the UK, it is quite important to analyze all the benefits that has been given. So for example, when I work with KPMG, every time I travel on a train, I travel on a taxi, I can claim back the expense. And as long as the expense is supported by the train ticket, the taxi receipt, then that is not a benefit to me because it's just a reimbursement of expenses. So I buy a train ticket for £50 to go to Manchester. Then I put in a claim to the company for the £50 expense that I incurred. Yeah. But if the train fare is 50 and the company allows me to claim £100 because they have certain allowances for depending where you go, that £50 difference is a taxable benefit. Okay, next page. Accommodation. Now, sometimes when you work overseas, you're given accommodation. So the benefit in respect of accommodation, it's annual value. Yeah, the apartment, the house, whatever is being given. So there is an additional benefit if the property costs over £75,000. So if the example is below, yeah. So the taxable value of accommodation provided to an employee is the rent that would have been payable if the premises had been let at their annual value or rateable value. Yeah, so we need to know what the rental value is, and that's the benefit that you'll be taxed on. If the premises are rented, then the taxable benefit is the higher of the rent actually paid and the annual value. So, for example, okay, so in the next phase, if the property was bought by the employer at a cost of 75,000, at the cost of more than 75,000, yeah, then there's additional benefit charge of the cost of providing that living accommodation multiplied by the official rate of interest at the start of the year, which is 2.5%. 2.5%, had you done an exam, would have been given to you. So if the property was 100,000, so 100,000 minus 75,000 at 2.5%, that would be the taxable benefit for accommodation. Yeah. So a lot of figures that you see here would have been given to you in the tax tables had you sat an exam. Okay, next slide. Next one. Navina. Nakiba, sorry. Next slide, please. Okay. Uh-oh. What happened? Okay. Now, job-related is, there's no taxable benefit in respect of job-related accommodation, yeah? And accommodation is job-related if residence in the accommodation is necessary for the proper performance of the employee's duties. Sometimes if you work in a hotel, you're required to stay in a hotel and accommodation is provided within the premises, then the tax benefit would be considered as a job-related. So you do not add back that benefit, which could increase your tax liability. The accommodation is provided for the better performance of the employee's duties. And employment is of a kind in which it is customary for accommodation to be provided. For example, policemen, military people. Yeah, so sometimes they're provided with accommodation. The accommodation is provided as part of arrangement in force because of a special threat to the employee's security. Now, for directors, there are certain rules. If you're a director, they can only claim the benefit if they do not have a material interest in the company. In other words, they do not own more than 5% of a shareholding of a company. So if I'm a director of a company ABC and I own 10% shareholding, any accommodation benefit that I receive will be a taxable benefit because it's not job related and because I control the company. If I only own 4% of the shares of that company, then any benefit from the job-related accommodation will not be taxable. And if you're a full-time director, working director, yep, then okay, for directors, okay, they can claim if they're full-time working directors or the company is non-profit or is a charity. So non-profit companies, charitable organizations, companies that are supposed to operate at a no gain, no loss, or any profit that they receive is actually plowed back into the company. So they're not subjected to tax. The impact of, okay, next slide. Okay. So if you look at taxable benefit, what does taxable benefit mean? You receive a salary, which is a cash amount, and then you receive all these taxable benefits. What the taxable benefit does is it will increase your tax liability. But of course, the danger with some of these taxable benefits, you could be pushed from a basic tax rate of 20% up to, then you move up to the next tax rate of 35. Hang on. Yeah, so the tax benefit could bring your tax rate from 20 to 40% up to 45%. Yeah, so sometimes you need to be careful with how much benefit has been given to you. So for general business expenses, if the business expenses are for travel or hotel stays and reimbursed by an employer, the basic rule is that the reimbursement amount is the taxable benefit for the employee. However, to avoid being taxed on the amount, an employee must make a claim to deduct it as an allowable deduction. For private incidental expenses, when an individual has to spend one or more nights away from home, the employer may reimburse expenses on items incidental to their absence. So when I was working with KPMG, we usually have to travel out to Manchester, outside London, sometimes overseas. In my case, went to Cyprus, I think, and a few other places. All the expenses that incur, I just claim back at cost. Yeah, and then you get overseas allowances, station allowances. Those are considered as taxable benefits. In my earlier days, my salary not so high, so it doesn't matter. It didn't push me up to the 40% tax bracket. Expenses relating to living accommodation, in addition to the benefits of living accommodation itself, an employee are taxed on related expenses paid by the employer, for example, heating. So, when you rent a place, sometimes the company pays for the heating, the lighting, the cleaning of premises. In Brunei, I can understand now there's brown water. Yeah, so the employer has to pay to make sure that the water is filtered from brown to clear. That is considered as a taxable benefit. Repairing, maintaining, or decorating the premises as well as a taxable benefit. Provision of furnitures. However, it should be noted, that if the accommodation is job related, the taxable amount is restricted to the maximum of only 10% of the employee's net earnings. Yeah. Okay. So next slide. Cars. In the UK, it's common to be given a car, a company car. So there are certain benefits, taxable benefits. So employees who have a company car are taxed at a percentage of the car's price list. And of course, it depends also on the level of the car's carbon dioxide emission. Yeah? The same percentage is multiplied by 22,400, and the tax tables, the rates have been given in the tax tables where private fuel is also provided. Yeah? Diesel cars has a supplement of 4%. I don't know why in the UK diesel is considered as higher carbon emission than leaded and unleaded, but in the UK, if you drive a diesel car, there's a 4% supplement on the car's price list, and it's added to taxable benefit. Pool cars are exempted. Pool cars meaning a company has 3 or 4 cars and about 20 employees can use the car as a carpool. Yeah, they are exempted if the following conditions are satisfied. It is used by more than 1 employee. Any private use is merely incidental to business use. It's not that you're going to use the car to send your kids to school or do your household shopping, but it's just incidental. So you just drop your kids off to school and then on the way to work, that is considered as incidental. Yeah? And it's not normally kept overnight at or near the residence of the employee. So if the pool car is kept in your house, then it can be considered as a car for your own use, and the use of that car will be subjected to certain taxable benefits. Okay, next slide. Beneficial loans. Now, sometimes companies do advance loans to employees and at a cheap rate, because staff loans sometimes are at a much favorable rate than bank loans. Yeah? So cheap loans are charged to tax on the difference between the official rate of interest and interest paid by the employee. So, for example, if bank interest, so in Brunei, the bank interest rate says 9%. The company give you a staff loan of say 2%. Because you have been working for the company a long time, so to reward your longevity, your loyalty to the company, they have decided to give you a staff loan at only 2%. So the difference between 9 and 2% of 70% is considered as a taxable benefit. Yeah, I mean that's the case in the UK. Now, however, the taxable benefit or employment-related loans to employees and relatives give rise to benefit equal to any amount written off. So if you had a loan, and and suddenly you cannot pay and it's written off, that loan is considered as a benefit, not the interest amount, but the whole principal amount. Unless the employee dies, then obviously, upon death, you cannot claim anything back from the estate because it is between the employee and employee. Yeah? So any amount written off will be added back to your tax as a benefit. And usually with loans amount, if it's large, you certainly may push yourself to a higher tax bracket. Yeah? The excess of interest based on the official rate prescribed by the Treasury over the interest actually charged. Okay, so that's for cheap loan. And the following are not treated as taxable cheap loan as long as the loan is on the normal commercial terms in the ordinary course of the employer's money lending business. So if I work for a bank and the bank provides staff loan, which is very common with all banks in the UK and in Brunei, that is not a taxable benefit because the nature of the business of the bank is to provide loans. So if you get a cheap car loan for a finance company because you're an employee, that is not a taxable benefit because you're getting the loan or the hire purchase from a company that does that business in the ordinary course of its business. Yeah, a loan made by an individual in the ordinary course of the lender's domestic and or family of personal arrangement. So for personal family arrangement, there may be some dispensation in terms of the taxable benefit. Okay, next slide. I noticed a bit of typo errors here and there. So what are other taxable benefits? So this is just a list. In fact, I think in the textbook there's probably about 3 pages of taxable benefits. Scholarship, taxable at cost if given to members of the employee's family. So sometimes when your child gets a scholarship, it might be a burden to you because that scholarship is considered as a taxable benefit. Childcare. If a company, for example, like KPMG, because we have so many employees, sometimes they do provide nursery service or a childcare service for working mothers who have children, or you employ a child giver, to take care of your child. There are certain benefits that the government give, and that is actually an exempted benefit. Yeah? So the benefit you receive from childcare is not considered as a taxable benefit. Gift of goods. Now, if you receive goods during the year, it should not be more than £250. Anything in excess of that will be considered as a taxable benefit. So, for example, like when I was in KPMG, they pay for company outings, annual dinners, sporting facilities. So as long as that benefit does not come to more than £250, then we are not taxed at all on the benefit. Yeah. So non-cash awards for long service. If you work for a company for more than 20 years, any benefit like a watch, certain souvenir items that's given to you, that is considered as exempted. Yeah. Removal expenses. Now, when you move from one accommodation to another, and there are removal expenses, the first 8,000 will be exempted. Anything more than that will be considered as a taxable benefit. Sporting and recreational facilities. KPMG last time we were allowed to play squash at one of these clubs. It was open to all employees, and the facilities are, you just show your staff card and you can actually use the facilities for free. But because it's given to the whole KPMG staff, all 3,000 of us, it's not considered as a taxable benefit. It's just considered as a facility provided by the company for its employees. Yeah. Welfare counseling. If you have to, for example, because of COVID now, a lot of people are asking for counseling, depression, and everything else. Yeah. So some of these are not considered as taxable benefits because it is work related. So you do not have to declare some of the counseling expenses that's being incurred. Yeah? Workplace sometimes provided parking, but if everybody is provided with the parking, then It is not a benefit. Work-related training. Training is very expensive and can cost quite a lot of money. In Brunei, actually, for companies, if companies provide training to its employees, you can get a double taxation relief. So if you incur 10,000 expense for training in Brunei, you can claim an additional 10,000 expense as a tax deduction. Yeah, so you reduce your tax liability again by additional 10,000 for the training that's been provided. In the UK, for work-related training, any training that the company incurs for its employees, the employees will not be taxed as a taxable benefit because it is work-related, and training is an essential part of the progression of people within the organization and also for providing services to customers. Yeah. So work-related training is essential in our organization and is not considered as a taxable benefit to the employee. Employees provided uniforms. If you have to wear a uniform for military, or you work in a supermarket or an organization which requires uniform, that is not a taxable benefit. Staff parties, people like parties in the UK, but as long as if it's less than £150 per person, then it's not a taxable benefit. Medical treatment, a company can claim up to employ up to £500. Yeah? Anything more than that, then it's a taxable benefit to the employee. Okay, unless he reimburses the company on the expense, then it's the difference between what is paid for by the employer and what has been reimbursed by the employee. That difference will be the taxable benefit. Okay, next one. I think this is probably finished already on this. Property income. Maybe another 10 minutes to be finished. Property income or property business income. When you have a property and you rent it out, then you're subjected to tax. Of course, there are different rules for individuals and companies. So property business profits and losses for individuals are calculated for tax year usually on a cash basis. Okay, so for individuals, there are certain rules later, but it is usually calculated on a cash basis. So if you receive, so you rent a property out for 12 months and you only receive 10 months rental, because it's on a cash basis, you only recognize your income on that 10 months income. Yeah. What's accruals basis? An accruals basis is you rent a property for 12 months, you recognize the rental income for 12 months, but if you do not receive 2 months rental, maybe because the person has run away, you cannot find it, then you are allowed to make a provision for the impairment loss. I think I'll cover that a bit later. Okay, there are special rules on finance for individuals. You can read that in the textbook. Okay? Income from land and building in the UK is taxed as non-savings income. So last week, if you remember the 3 headings: non-savings income, savings income, dividends. Yeah, so income from land and building will be under the non-savings income. Now, if you have multiple properties, then all the receipts and expenses for all properties are pooled together as one to give a single profit or loss. So if you have 3 properties, you take the income of all 3, take the expenses. If you make a profit on 2 and a loss on the 3rd one, it doesn't matter because you can net off the loss against the profit of the other properties. Okay. The main taxable receipt for a property business is rent paid by the tenant to the landlord taxpayer. Okay, and then deductible expenses include repairs to the properties, agents' fees, and insurance. So when you rent a property, obviously there are expenses that you will incur, and these expenses can be deducted against the income to reduce your taxable income. Okay, next slide. Okay, property business income can alternatively be calculated on the accruals basis as receivables rather than received, and expenses payable rather than paid. Yeah. So expenses payable, that means you have accruals. Receivables, you have to recognize the amount that has not been received yet, because it's on an accruals basis. So where the accruals basis is used, relief is available for irrecoverable rent. That's an impairment loss. So as I mentioned just now, if you rent a property for 12 months, on a cash basis, say you receive 10 months rental. On a cash basis, it is 10th month rental. On an accruals basis, you must recognize on an annual basis. So you recognize 12 months, and you cannot recover the 2 months. Usually in exam questions, it will say that after 10 months, the tenant has left the property and cannot be contacted or cannot be located. And so the keyword is cannot be contacted, cannot be located. So in other words, they cabut, they've run away, cannot be found. So for the 2 months, you are allowed to make a provision for bad and doubtful debt. So we call it irrecoverable rent, and is known as impairment loss. I mentioned earlier that for individuals, you prepare the property business income and expense on a cash basis. However, there are certain conditions though. An accrual basis must be used if the property income or cash basis receipts for the tax year exceeds £150,000. Once your income exceeds £150,000, you must use the accrual basis. If the property business is carried out by a company, so a private limited company or Sdn Bhd or Berhad, rather than Shahzadi as an individual, then it has to be on an accruals basis. Or you make an election. In other words, I decided that I want to do it on an accruals basis rather than a cash basis. There's an example in the textbook that you can see what's the difference between cash and accruals basis. Okay, probably the last slide, I think. Next one. Okay, so or maybe 2 more slides. I think. So what's residential property? If a residential property is let furnished, in other words, furnished means you have a lot of furniture. Yeah? So in Brunei, sometimes you read the newspapers, property for rent, and it says unfurnished. Unfurnished, that means the property is empty. There's nothing in there. Yeah? You walk in, you see 4 walls. There's no beds, there's no furniture or anything. Or semi-furnished. Semi-furnished means sometimes you have furnitures in the sitting room, maybe some kitchen utensils, but nothing in the bedroom, or fully furnished. Yeah, so when I rented out my property last time, it was fully furnished. And because it's fully furnished, then obviously when people use the apartment, there'll be wear and tear on the furnitures that I have. And if you rent your property out fully furnished, you are entitled to a domestic item relief, can be claimed on your fixtures and fittings. Yeah? So domestic relief basically reduces your taxable income. There's no relief is given for the initial cost of providing the items. Yeah, relief is given if a domestic item is replaced. So if my settee or something like that, or furniture is worn off, then I replace it. Only then can I claim relief. But if the furniture is already there when I rented, you cannot claim any domestic item relief. Yeah? So what are domestic items? They're defined as furniture, furnishing, household appliances, kitchenware. The amount of relief is the expenditure on the new replacement asset less any proceeds. So for example, if I have a washing machine, and the washing machine only washes, yeah, there are 2 types of washing machine. One is a washing machine that wash, one is a washing machine that wash and dry. Yeah. So in my London apartment previously, I had a washing machine. In these old days, you only have a washing machine that wash. Yeah, this is 30 over years ago. And the agent asked me to replace the washing machine because the washing machine was a bit more upmarket type, so it can wash and dry. I cannot claim an allowance on the washing machine based on the dryer part. Yeah, I can only claim because originally I only had a washing machine that washes, but when you put something that is enhanced, you can only claim the original expense rating only to the washing part. Yeah, so if I sold that washing machine, so if I bought the washing machine 200 and I sold it for 50, I can claim 150 the difference and take out the element which is the tumble dryer, say maybe £50. So I can only claim a relief for £100. So if the new asset is not the same, substantially the same as the old, only the cost of the equivalent asset is given relief. Yeah, so as I mentioned, if appliance has got multiple functions compared to the original function, then you can only claim the cost of the original function. Yeah. Next. Maybe, oh, okay. Okay, this is probably the last one. Furnished holiday lettings. So basically, if you have a house and it is let for holidays, yeah, so the receipts and expenses of FHL will usually be calculated using the cash basis, unless you decide to make an election for it to be calculated on a accruals basis. And FHL is basically treated as if it was a trade, so there are some differences between the normal property business and FHL. The finance costs for individuals are not restricted. So you just read in the textbook what is meant by, because for individuals there are certain restrictions. For furnished lettings there are no restrictions. Yeah, capital costs of furniture are deductible when paid if the cash basis is used instead of replacement domestic relief. Now, if you do an accruals basis, then you get capital allowances. Yeah, so capital allowances is in a future chapter. The income qualifies for relevant earnings for pension relief, and capital gains tax rollover relief. Entrepreneur relief are also available. Capital gains relief and entrepreneurs relief will be covered in probably 2 lectures time. Yeah. So, but you don't really need to know too much about this. This is just another topic within the property income. Some of these minor sections that I'm covering is just to make sure that when ACCA checks, I have actually done more than 70% coverage of the syllabus. Yeah, so don't get too worried if you don't understand. I just want to make sure that I have sufficient coverage. At least from a lecture point of view, I have the coverage, but from the assignment point of view, some of this will certainly not be relevant at all. None of you, I would advise to look at furnished holiday lettings. I mean, in Brunei, there's probably not a lot, so it's not going to be a relevant significant source of revenue. Yeah. Next, probably last, hopefully. Okay. Second last then. I keep saying last, so I don't even know how many slides I have. Okay, so loss from a UK property business is carried forward to set off against the first future profits from the UK property business. Yep, and you can carry forward it indefinitely. It can be carried forward until the UK property business ends, but it must be used as soon as possible. So if you have a loss this year, you carry forward next year, and you must offset against the following year's profit. You cannot just delay just because you want to offset against future years if you think that the tax rate might increase in the future years. Yeah, so you want to reduce your tax liability by carrying forward your profit, your losses to a year where the tax rate much higher than the current year. Losses from the FHL business must be kept separate. It can only be used against the profits of that similar business. Yeah. So if you have your furnished holiday lettings, you cannot offset that against your other property business income. It has to be done separately. Okay. And finally, I think the next one, it tells you what your next lecture is going to be. Next slide. Yeah, okay. So the topic covered in my next lecture will be computing trading income. I might put in something else within that, because the chapter, when you go to it, has mainly just computations only. So what I might do is just highlight some of the key areas in terms of how you do, what you look at when you're computing in terms of the income, what are the expenses that are allowable and disallowable, and how you actually approach doing a computing trading income exam question. But even so, it doesn't come out in the exam. It is something that you can look at in terms of the recommendation of personal income tax, but then you will know how to set up the format, the pro forma, in terms of computing trading income. So the two topics that I covered today related to taxable benefit. The impact of taxable benefit is when you do your own tax returns, it is important that you keep all the supporting documents in terms of the expenses that you've incurred, in terms of the expenses that's been reimbursed by the company, so that you can basically ascertain what your tax rate is. Is it basic 20, 40, or 45%? Yeah. Sometimes as an employee, you probably might tell a company, hey, I don't want too much taxable benefit because I don't want to be pushed to a higher tax bracket. So the impact of taxable benefit is it increases your income, which actually increases your taxable income. Yeah, that means you will end up paying more tax. The more benefit you get, the more tax you have to pay. On property income, the important thing to look at property income is usually done on a cash basis, but you can use the accruals basis if certain conditions are met. Yeah, if your income is more than £150,000 and so on and so forth. Yeah, and if it's a company and if you're making an election. In the UK, you have a choice of, although it's stated that you do the cash basis, but an accruals basis is an alternative. As a taxpayer, you can make an election as to whether you want to use cash or accruals. Yeah? If the accruals give you a lower tax liability, then let's see what's the example in the textbook. So the example in the textbook on page 95, 96 gives you the differences between the cash basis. In this case, property income is 8550 on the cash basis. Accruals is 8625. Yeah. So in that case, you probably elect for cash basis because it is a lower taxable income figure. But you know, different questions will come up with different answers. Yeah. So then it's up to the taxpayer to decide what they want to do. Okay. Any questions? I can't even do a chat here. I have no chat icon. I will try and. So you have to talk to me.
You also upload the last week's slide.
Sorry?
Can you also upload the last week's slide?
I uploaded all the slides on the site already. But because I can't open my site, so I can't even see what I've up. But I loaded all of it up onto, you know, the material. It was all there. Let me try when I go back to London. Okay. I'm going back to London later today. My son-in-law is an IT expert. I'll ask him to see whether he can sort this out for me. Because when I opened it just now, it was blank, nothing there. So I thought, oh, panic. But I'll see now. Okay, I mean, if it's not there, then I'll just send it to Nakiba. Then you can just upload it on my behalf now. Okay?
Okay.
How's everyone? I keep seeing cases getting worse and worse. I might not come back to Brunei, I think.
It's because people are not obeying the what do you call that? The law, sadly.
Yeah, I mean, when I arrive it's different. In England, it's so free. I mean, if you go, I went to watch the Liverpool game last night, but in the taxi, in the buses, you must wear your mask. When I went to IKEA, I had to do shopping for my daughter's bedroom and supermarket, we wear masks. So, but mask is not compulsory here, but I see a lot of people still wear masks. You know, they're just being cautious. But people are free to do anything they want. And when I arrived in London, I had to do a what do you call it? Test. They have the self-test kit. So, you know, my daughter did all the swab. You have to swab your mouth, back of your mouth and your nose, and 5 places, and then send it. And then within 2 days, they will send you results. So alhamdulillah, it's negative. And I'm free to do anything, no isolation. So Brunei is lucky because we are still green, but I think soon Brunei will be amber. And when you're amber, when you arrive in London, you have to self-quarantine for 8 days at home. In other words, you stay at home and they will monitor you. And I think that's what they need to do in Brunei. I mean, they put the wristband, but that is not digitally, there's no technology, no chip. You can go out of your house, and if you wear long sleeve and cover, nobody will know. So I think the biggest problem we have in Brunei sometimes is stubbornness. I even told my wife, and even my simpang, because my simpang is all brothers and sisters. I said, you should not go visiting your sister, nor should your sister come to the house. And to me, I'm quite concerned because I have a young grandson, 1 month old. I got a 4-year-old granddaughter. And I think sometimes in Brunei, people are taking the irresponsible attitude. No, it's not going to happen to me. But I don't know. I'll wait later on at 4 o'clock and see how many cases there are. I hope it starts going down. Unfortunately, yesterday there was 2 deaths. It is in critical, so we're not improving. I can't wait to do physical classes. Then I don't have to worry about all this technological problem, uploading files and all. Did anybody record the lecture just now? Because I know someone recorded the first one. Then maybe you can play it back. If you record it, then you don't need to upload the slides because you already have the presentation then. Yeah. Okay, anything else? Everybody good?
No, sir. Yes.
Okay. Thank you for listening. I will try and sort out this when I get back to London later today, and then hopefully next week I should be out. Is there a midterm break?
Yeah.
Next week,
Next week, sir.
Oh, next week. Oh, so I'm free next week. Okay. No. So next week no lectures, is it?
Yeah.
Okay. So give me time to sort out that. Okay then. So enjoy your midterm break. I mean, you're doing the same thing as you'll be doing anyway, staying at home, hopefully. If any of you got any questions on the assignment, just send me an email. Okay, and WhatsApp me as well. Whichever way you think is easier. Okay? So take care. Stay safe. See you in 2 weeks' time. Okay?
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Take
See you.
Stay safe, sir.
Bye.